It's a watershed moment in terms of what they're seeing with these deals, right? When we saw in Saudi, you'll see it, UAE. It just shows, I mean, they're getting to the front of the line versus the Chinese that are obviously back of the line relative to a lot of the blockades with the NVIDIA H20s. And I think this is key. The AI revolution coming to the Middle East.
Indeed. And Sam Altman is also traveling alongside the president. There is a chance that OpenAI could also announce new data center capacity in the UAE. It would make sense. We know Mubadal as MGX is a stakeholder in OpenAI. Is that something that you're also tracking, Dan? What else can we expect to see from the president's arrival here in the UAE and potential announcements on tech moving forward?
Yeah, Dan, I think it's really going to be about supercomputer data center build-outs. I mean, because look, everyone's focused on outside U.S., like where the growth is. Of course, it's China. Europe's really nowhere. And then look, Middle East, I mean, that's sort of the golden goose that everyone's going after, from Jensen to Palantir to obviously Musk and everyone else. You're going to see more and more of these announcements over the next 24, 48 hours that aligns with what we saw in Riyadh.
Dan, you called this a watershed moment. Is Saudi Arabia now ahead of China in the global AI race, or is that an overstatement?
Look, I think it's an overstatement in terms like they're not like China. It's U.S. and China, but here's the thing: without the NVIDIA chips, you're nowhere in AI revolution. There's only one chip fueling the AI revolution. That's NVIDIA, and I think that's a big issue with China in terms of that blockade on the H20s. Relative to Saudi Arabia and obviously UAE and others, getting the next-gen NVIDIA chips. That continues to be the key.
The U.S. is close to signing a contract to export 500,000 of NVIDIA's sophisticated AI chips yearly to the United Arab Emirates, according to a Thursday Reuters story. The arrangement, intended to continue through 2027 with an option to extend to 2030, provides 20% of the chips, around 100,000 units, to UAE-based AI firm G42. The remaining chips would be shared by U.S. corporations with significant AI operations, such as Microsoft and Oracle, which may also explore creating data centers in the UAE. According to the agreement, G42 must match each UAE facility with a comparable data center in the United States, encouraging domestic infrastructure alongside international deployments. A separate working committee will define what counts as an advanced AI chip and create security standards. These processors likely encompass NVIDIA's Blackwell GPUs, or maybe its future Rubin series surpassing the preceding Hopper generation in performance. According to Bloomberg News, G42 may be able to purchase computing power equivalent to 1 million to 1.5 million NVIDIA H100 chips during the duration of the deal, which is approximately 4 times the amount allowed by the Biden-era AI diffusion export ban that the administration intends to lift. According to Reuters, discussions are ongoing, and the agreement may change before it is finalized. The Trump administration reached a preliminary agreement with the UAE to purchase 500,000 NVIDIA advanced AI processors each year. The agreement was valid until at least 2027, but it may last until 2030, according to Reuters, citing unnamed persons familiar with the subject. According to the agreement, 20% of the chips, or 100,000 every year, will be allocated to UAE-based tech firm G42, while the remainder will be divided among U.S. corporations such as Microsoft and Oracle, which may also seek to develop data centers in the UAE. U.S. President Donald Trump is touring the Gulf region this week and unveiled a $600 billion investment package with Saudi Arabia on Tuesday. Massive AI infrastructure partnerships with NVIDIA, Advanced Micro Devices, and Qualcomm are part of the package. Over the next 5 years, Saudi Arabia's public investment fund subsidiary, Humane, will build AI factories in Saudi Arabia that will be powered by NVIDIA's most advanced GPUs with a projected total capacity of up to 500 megawatts. Humane will also launch Saudi Arabia's first NVIDIA Omniverse cloud platform. Vivek Arya, an analyst at Bank of America Securities, estimates that the Humane deals will cost between $2 billion and $3 billion a year, likely beginning in 2025, for a total of $15 billion to $20 billion over a multi-year period. Earnings growth and fundamental research are typically used by equity research analysts on and off Wall Street. However, a lot of traders use technical analysis to create models that anticipate the direction of share prices. Some investors use trends as a guide to predict where they think a stock will trade in the future. A moving average and trend line could be used by an investor to evaluate Nvidia's stock's long-term prospects. They can use a trend line to extend that trend into the future if they think a stock will continue to be above the moving average, which many people interpret as a positive indication. The 200-day moving average for Nvidia is 125.33, which is less than the $133.04 price as of right now. A stock is often regarded by traders as a bullish signal when it is above its moving average, and as a more bearish indicator when it crosses below. If conditions stay consistent, investors could use trend lines to predict where a stock might trade in the future. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So, if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Just on this Nvidia Humane deal, what exactly makes it different from some of the other global AI plays that we've seen? Obviously, a very significant announcement coming out of the kingdom this week. Why is it so important, and how soon before we see a material impact there?
Look, I think it wasn't on the radar relative to numbers this big. And I think the fact that they're going so aggressive in terms of the supercomputer build-outs, obviously opening, and you see in terms of U.S. tech toward Riyadh, I think that's what's so significant, because it's not just about the 18,000 chips. It's about what's behind it. And ultimately, look, we believe this could end up being $1 trillion in incremental spend across Middle East for AI, and that was not factored into these stocks.
$1 trillion for incremental spend, Dan, you said.
Yeah, look, and that speaks to our view why it's been such a game changer this weekend. It's a shot across the bow at China relative to the NVIDIA chips.
Interesting to also see AMD locking in this $10 billion partnership with Humane. What do you make of that deal, Dan? And does that finally position AMD as a credible challenger to NVIDIA when it comes to AI compute and deal flow in this part of the world and beyond?
Look, it continues to be NVIDIA's world, everyone else paying rent. Okay, but AMD, obviously others are trying to narrow the gap. For Lisa Su, I mean, that was a significant deal. They're going to continue to sort of basically say, don't forget about us. I mean, that's what really that movement was about. And they're going to be big beneficiaries as well. It's not just a zero-sum game. It's not just about NVIDIA. AMD is going to be a big beneficiary. And that's why, they were with Trump in terms on the trip.
You mentioned this before, but I wanted to understand a bit more about how these partnerships with the Gulf nations are ultimately going to impact global AI development moving forward. Obviously, the US is a leader, China coming in as a close second, and then, of course, significant capital and energy and investment happening in the Middle East. You mentioned this before, but where does all of this leave Europe, which has, over the last few years, essentially regulated itself out of any possibility to have a leg up in this sector?
I mean, look, that's the shame. And somebody like myself, that spends so much time in Europe, there is innovation that wants to be there. You saw, in France when they had the AI conference. But right now, when you look who are the losers from these deals, it's China and I think Europe. Europe's a loser from the deal because it just shows, everyone is in this AI party. And Europe's outside the party looking in, saying, let us in. But the regulatory won't let it. And that's why where are these chips going? They're not going to, they're not going to Europe. I mean, they're years and years behind, especially when you look where Middle East is.
As China hawks become more worried that the projects are endangering U.S. economic and national security, President Donald Trump's rush of artificial intelligence agreements on his Middle East tour is creating a rift within his own government. While shipments to the United Arab Emirates may exceed 1 million accelerators, primarily for projects involving or owned by U.S. companies, the Trump team has negotiated deals for parties in Saudi Arabia to purchase tens of thousands of semiconductors from NVIDIA Corp. and Advanced Micro Devices Inc. These chips are the most sought-after technology of the AI era and are used to create and train models that can replicate human intelligence. According to persons aware with the situation, some senior administration officials are trying to stall the transactions because they believe the U.S. hasn't put in place enough safeguards to stop American chips sent to the Gulf from eventually helping China which has close ties to the area. According to the persons, these authorities contend that too many specifics are still pending and that the agreements shouldn't be made public without legally binding clauses, even though the UAE and Saudi agreements contain high-level wording prohibiting Chinese companies from obtaining such chips. The readiness of White House AI advisor David Sachs, who is assisting in facilitating the negotiations, to consider recommendations from Gulf leaders that they perceive as obvious threats to national security, has also disturbed China hawks. The existing bilateral agreements in the Middle East do not contain any of those recommendations. Beyond those security concerns, several top Trump officials questioned whether it was prudent to export that many chips to any country outside of the U.S., according to the sources, considering the administration's emphasis on preserving American leadership in AI. At an AI event in Paris in February, Vice President J.D. Vance stated that the Trump administration will make sure that the most potent AI systems are constructed in the United States using chips that are conceived and made in the United States. The U.S. would still control the great bulk of the world's computing power if all of the disclosed and anticipated Middle East agreements materialize, but Gulf nations would for the first time have sizable capacities fueled by top-tier U.S. gear. This video, which is based on conversations with around a dozen people who spoke about internal administration deliberations on condition of anonymity, was not officially commented on by a White House representative. Requests for response from Sachs, AMD, and the Saudi government were not answered, and NVIDIA and a UAE representative declined to comment. Sachs and other proponents of the agreements contend that nations with aspirations for artificial intelligence may eventually look to Chinese companies for alternatives, as they have made strides in catching up to industry leader NVIDIA, if the U.S. does not push the globe to utilize American processors. Sachs stated on stage with Saudi Arabia's Minister of Communications and Information Technology on Tuesday that we need our friends, like as the Kingdom of Saudi Arabia and other important partners and allies, to want to build on our technologies. According to him, a friend like Saudi Arabia is completely unconcerned with the risk of that technology ending up in China. There are disagreements within the Trump administration. According to the persons, in increasingly heated discussions over the last 2 days, a number of senior officials have talked about ways to slow down the implementation of the Gulf AI agreements and put a stop to initiatives that haven't been revealed yet. One issue is a bilateral agreement between the United States and the United Arab Emirates that would involve a large-scale effort by OpenAI, the company that invented ChatGPT. Following visits to Saudi Arabia and Qatar earlier this week, Trump landed in Abu Dhabi on Thursday. According to those with knowledge of the situation, officials on the ground were still engaged in active discussions the morning of the president's visit. They also stated that they anticipate the transactions to proceed soon. China hawks might use the regulatory procedure in Washington to voice their worries if that occurs. All shipments of AI chips to the Gulf must be approved by the U.S. government via a licensing procedure that involves multiple federal agencies. After rejecting a framework proposed by President Joe Biden, administration officials are currently working on global semiconductor export control regulations. That offers yet another chance to incorporate other strategic aims and particular China guardrails. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Do, and maybe perhaps people are betting that things are going to be quite positive, with sales skyrocketing, 737% in 2024. Deutsche Bank putting in a note calling this growth among the fastest they've ever seen within the tech world. Analysts expect at least, and this is an average, 156% growth in 2025 and triple-digit growth in 2026. So the company, you mentioned it, but they rent out GPUs as a service with major backing from both NVIDIA and Microsoft. So NVIDIA owns roughly 6% of CoreWeave outstanding shares while supplying its critical chips. Strong revenue guidance today after the bell would really signal continued demand for NVIDIA's processors, and any expansion of data centers or customer base would also boost NVIDIA's enterprise outlook. The information, maybe you guys remember earlier this month, reported Google is close to renting NVIDIA's AI servers from CoreWeave. They're working out a deal. It's not officially confirmed, and I would bet it's not going to be announced today, but Google's logo already appears on CoreWeave's website. I just grabbed that earlier. It's very tiny, but it's the tiny right square on the screen. So you can read what you want from that. Microsoft, though, also pouring billions of dollars into CoreWeave for Azure's GPU infrastructure. Positive guidance would also strengthen Azure's position against competitors like AWS and Google Cloud. So with Microsoft, though, representing about 62% of CoreWeave's 2024 revenue, analysts are going to be watching for changes in this customer mix as new clients do come aboard. Today's earnings really just serve as I'm going to call it a crucial barometer for the entire AI infrastructure ecosystem, with NVIDIA and Microsoft's futures deeply intertwined with some of CoreWeave's success. And
Sachs has argued that aggressive proliferation with security provisions would be a geopolitical success for the U.S. and essential to preserving American leadership in AI, as have other officials who back the Gulf projects. Tech titans like Jensen Huang, the CEO of NVIDIA, have reiterated Sachs' claim that the U.S. is losing ground to China in the production of sophisticated chips. The argument goes that the U.S. runs the danger of losing such markets to its primary geopolitical rival if Washington forbids nations with AI aspirations from constructing data centers using American technology. Businesses may decide to purchase processors from firms like Huawei Technologies Co., the Chinese tech behemoth at the core of Washington's attempts to limit Beijing's aspirations in the field of artificial intelligence. On the opposing side of the argument, some officials from both the Trump and Biden administrations have maintained that Washington may set the rules of the road as long as other nations continue to desire American chips because of America's significant technological advantage. These officials contend that policymakers can afford to be tough in discussions and shouldn't grant nations access to top-tier American weaponry without making compromises and making unwavering security commitments. Since the United Arab Emirates and Saudi Arabia pledged a combined $2.4 trillion in U.S. investments that paved the door for the latest AI deals, Trump officials in this second group believe they may be losing the internal battle over Middle East chip shipments. Sachs has been one of the key players on the ground as government officials and tech entrepreneurs hammer out the accords, and some top administration officials have become cautious of the bargaining stances he has taken. According to persons familiar with the situation, Sachs indicated openness to the UAE hosting a production plant from Taiwan Semiconductor Manufacturing Co., the top chip manufacturer for companies like NVIDIA and AMD, at a meeting with Emirati officials prior to Trump's visit. As part of the larger chip agreement, the UAE has long desired such a plant and requested cooperation from the U.S. government. According to the People, the hawkish Trump administration consider a potential TSMC facility in the United Arab Emirates to be worrisome. The officials contend that, given the UAE's links to Beijing, supporting its aspirations to produce AI chips locally would put the nation's security at needless danger, particularly if political alignments shift in the future. Although independent discussions on such a facility are still ongoing, a TSMC plant is not included in the current agreement. TSMC chose not to respond. G42, a prominent AI company based in Abu Dhabi with long-standing ties to Huawei, is another persistent issue with the UAE. However, in order to make room for a $1.5 billion deal with Microsoft, it consented to sell off its holdings in Huawei and other Chinese suppliers. Some U.S. officials are still dubious about G42's dedication to U.S. priorities, as they were last year. According to Bloomberg, the Trump administration is currently evaluating a deal that would enable G42 to purchase the equivalent of over 1 million NVIDIA H100 accelerators, one of the company's best products. The chairman of the House China Select Committee, who last year published a video outlining the bipartisan panel's G42 concerns, is among others who have criticized that agreement. Landon Hyde, Trump's pick for a senior role at the organization that creates export regulations for chips and determines whether to authorize sales of individual semiconductors, provides the voiceover in that video. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
5,900 has sort of been this level to hit, and we've seen a lot of resistance there. Continue to see it again today with the S&P moving further off that level, off about 0.4% right now. So fill us in on the levels on your radar right now.
Yeah, that continues to be a focus. Yesterday looked more like a consolidation day. We did see a little bit of a lack of participation from a lot of sectors yesterday, and it was really concentrated into the Mag 7 as well as the communication services sector. Today today, we're starting off a little bit weaker, but you actually are seeing a little bit of participation. I would say it's kind of mixed when you're looking at advancing to declining stocks in the S&P 500. We have around 48% of the S&P 500 stocks right now in the green, and that's actually a pretty decent start for now, and we'll actually see how this is going to develop. But if you're looking at it on the longer term time frame, I'm still looking at 5,900. Until we break that, it's going to be a key area of resistance. We do actually have options expiration for May tomorrow, and so that could also be another reason why we're seeing kind of this wall being developed. Now, the major positioning at that wall actually doesn't expire until the end of June, so June 30th, but it is something to really kind of consider. I'm still looking at a potential comeback and retest of maybe that 200-day moving average sitting at around 57.65, 57.70 or so, and then you'd like to kind of move right back up, try to break through that 5,900. I'm not saying that this is complete failure right now of this level and we're going to go back and maybe retest lows, but we are showing a little bit of exhaustion. On the bullish front, though, you did actually have a bullish cross between the 20-period SMA, which is in blue, and the 50-period SMA here. So that's actually a bullish cross. You'd like to see some follow through there, but you are seeing RSI once again kind of hinge a little bit lower, just showing that the price action or the momentum is stalling out here a bit. You really don't want to see that hinge too much lower than that because that could once again signal maybe a potential pullback. But overall, we're still in a really good spot. Bears really don't have much for right now to really sell this market off, for a reason to really try to aggressively sell this market off, unless the news flow really kind of allows it to do so.
Yeah, and even despite some of these red arrows this morning, still looking at a Russell that's up 3% this week, an S&P that's up almost 4%, NASDAQ up even more than that, NASDAQ 100 up almost 6% this week, Dow a bit more modest in terms of those gains because of United Health. So as you zoom out a bit and take a look at the weekly S&P 500 chart, what stands out, Kevin?
Well, once again, we're kind of holding up in all of the areas that we should be holding up in. If you're looking at the weekly E-mini S&P 500 chart here, this is going back 3 years. We've broken through some key areas of resistance. The 20-week moving average, which acted as an area of support here for the last, let's say, 2 years or so, has broken. Now it was an area of resistance, potentially, but we really didn't even fade it that much. And that's an area you want to be able to hold. The 50-week moving average, which is in yellow, also having some confluence, sitting at around that 57.60-ish area if you're looking at the E-mini S&P futures here. But the anchored volume-weighted average prices, for the most part, we break in above a lot of them that have acted as key areas of resistance or potential key areas of resistance. So the trend right now is still to the upside here. What you get a little bit concerned about, and I always kind of go back, does this look like more of a 2022 style type of counter trend rally? And that would actually be a fairly aggressive rally to the upside, and then we go and fail and retest the new lows here. We're not out of the woods yet for that type of scenario. That could actually still happen, but the technicals right now still say you still try to push to the upside here, and the more that we can get farther and farther away from that 20-week moving average and get closer to reaching all-time highs here, the more that the bears really just are not going to be able to really put this into play. I also wanted to look at the 10-year Treasury, because this one is actually very interesting for me. If you kind of look at this dynamic that you're looking at for the 10-year Treasury rate futures contract here, we actually have an inverse head and shoulders pattern that we're pretty much testing the neckline right now. We got fairly close to it. I know we had some commentary coming from Powell, and we saw a re-rating to the downside when it came to yields, meaning that buyers were actually stepping in to the Treasury futures here. But this neckline that we're seeing develop here at around that 4.55% level will be a critical area for us. Usually when you have this inverse head and shoulders pattern, it's bullish for the price action, and breaking that neckline usually creates this kind of vortex or push higher in yields. And unfortunately, a push higher in yields would also coincide with the selling of treasuries here. Let's see if this actually develops. So this is a textbook inverse head and shoulders pattern that is kind of rare when you're looking at the rate complex just in general. So let's see if we're able to defend this level. Maybe we actually stay between that 4.5% range to the upside, maybe down to about 4.2%. Seems like equity markets actually do like that environment, but once you get towards that 4.6, 4.7 level, it makes it a little bit more difficult for equities to try to rally here if the spread between Treasury durations start to actually come together or actually contract here a little bit.
Okay, 10-year yield ticking a bit lower today, now trading below 4.5% right now. Also want to ask you about the VIX, seeing a slight tick higher there, but still trading around the 18 area. What stands out to you there? What are the implications, Kevin?
Yeah, so for the VIX, we're getting back to kind of these normalized levels or this bull market type of level. If you're looking at that, let's say 16 level to around that 19.5 or even 20 level. But one thing to kind of note, we are seeing a little bit of a re-rating back to the upside. If you're looking at the VVIX, which is volatility of the VIX itself, we actually did hit a critical oversold level, getting to that 87-ish area, and now you're seeing that re-rate to the upside. This doesn't mean that we're going to immediately see a massive bearish market taking place, but we were at an extreme, which once again kind of showed that it was relatively cheap to actually hedge positioning here. And if we start seeing that VVIX continuing to inch a little bit higher and maybe the VIX itself kind of stagnates around that 19, that probably gives you a little bit more of an environment that maybe volatility actually kind of re-rates a little bit higher. And if that could also complement this kind of stalling out in price that we're seeing on the S&P 500 sitting at that 5,900 level. So the ingredients are there for a minor pullback in the market, especially if you're looking at premiums in the options market here overall. But VIX for now is kind of holding up. The VVIX kind of showing maybe some signs that some hedges are being put on, though.
All right, Kevin, we're seeing the minor pullback right now. Can this be it?
This is it. Yes, this is the bull. This is what the bears wanted right here. 0.3% of the downside. That's exactly what we're going to focus on as bears here.
S&P still only about 4% away from those highs. Kevin.